This is Butler on Business, your home for economics from a free market perspective.
Welcome back to Butler on Business. My name is Jason Riddle in the studio with Alan Butler. We've been focusing our discussions today heavily around the Federal Reserve, around inflation, around the U.S. dollar, and now we have an expert on the phone to continue the discussion, Lowell Ponte. He's the author of the newly published book, The Inflation Deception, 6 Ways Government Tricks Us and 7 Ways to Stop It. Lowell, welcome back to the program.
Jason, Alan, great to be back with you again.
Well, it's good to have you back. Taylor, I've got an echo in my ears, and I think this is a very important discussion, one we have usually every day. But let's talk about the inflation deception. It's getting worse, not better, isn't it?
Oh, it is. I mean, people say we live in a time of uncertainty, and that's true if you want to know what the stock market will be doing next Tuesday. But in the bigger picture, there's no uncertainty at all. That is, the more government runs up debt, the worse the eventual tsunami, the tidal wave of inflation hitting us is going to be. And how much are we running up debt? As we've discussed before, every second we borrow another $58,000. So to understand what that means, just count with me, guys. Dot, dot, dot. In those 3 dots, your government, the spendaholic politicians of both parties running it, have just run up another $174,000 debt and added it to the bar tab of our children and our grandchildren. We are literally borrowing so fast that every 2 hours now, we borrow as much money as the U.S. government once paid for 2/3 of all the land west of the Mississippi, for the Louisiana Purchase plus Alaska. And that's in inflation-adjusted dollars. Now, the problem that you get into with debt, of course, is somebody has to pay it at some point, and we now have an active hostility toward the people who are actually producing things. I mean, we have a balance, and for a long time, as experts say, we were able to maintain balance because the economy was producing so much that we could afford to pay for government and welfare and a lot of other things. That tip, however, has now gotten so strangely over to the other side that we can't do this much longer. We now have twice as many people in America, for example, now working for the government as work in all of manufacturing combined. The average federal employee with wages plus benefits makes about $126,000 a year. That's roughly double what the average person in the private sector makes.
And
so we're building away from creating wealth, and now we're told that free enterprise is this terrible thing that has to be reined in. Well, I say once you've eliminated private enterprise, what enterprise do you think will be left?
Well, and then you stop and consider that the federal employees are now the largest special interest group, the largest batch of unions. We may have passed the tipping point.
We may have. I mean, if you look in America, 45% of all households in America, someone in that household now receives some kind of government check.
45%. That's 45%. A staggering number.
By the time the baby boom has retired, that will exceed 60%. And at that point, you can pretty much kiss democracy goodbye. People will just be voting to keep their government check coming.
Lowell, how do you think we get the broadest number of Americans understanding what this inflation deception is all about?
Well, Craig Smith and I wrote this book and another a year earlier called Crashing the Dollar to try to educate people so they can see how the government now uses inflation deliberately to secretly tax you, to redistribute wealth, to redistribute power in the society.
Well, Lowell, without giving too much away of this book, The Inflation Deception, can you explain a little bit about the process? How does the government tax people by manipulating inflation? Because it is a hidden tax that most people don't know about.
Oh, sure. Well, way back in the progressive era, when you had progressive Republicans like Teddy Roosevelt, progressive Democrats like Woodrow Wilson, they were ushering in an era of government welfare and unionism, both of which require the supply of money to be constant or always increasing. And that could not happen under a gold standard. A gold standard literally puts what are called handcuffs or golden fetters on politicians so they can't just print all the money they want. What ushered in with the Federal Reserve was the beginning of an era where the government would just be able to print money. And, of course, giving politicians the power to print money, as P.J. O'Rourke once said, is kind of like giving teenage boys car keys and whiskey. I mean, it will not turn out well. Politicians have no restraint at all absent a gold standard. The last vestige of a gold standard in this country came under Richard Nixon. He ended it in 1971 so he could print money to pay for the Vietnam War. And immediately inflation ignited. What cost $1 in 1971 today cost on average $5.65. So ask yourself, since Nixon, has your income gone up by 565%? Probably not. And that means that you are behind the curve. The average working American out there listening to us has not seen a real income increase in inflation-adjusted dollars for 40 years since that happened. Your income has just been stuck, but you're fooled by the fact that you get more and more dollars. Well, that's about to become really bad news, because you notice what the politicians did. They sold people on the income tax saying it'll hit only the rich. I'll tell you that again on April 15th, and you can talk to me. Then they said we have to have an alternative minimum tax to get those rich people who are avoiding taxes, but don't worry, it'll hit only the rich. What was intended only for the rich. And now they've come back a third time, like Lucy with the football for Charlie Brown, and said, oh, come on, we have another tax that's only for the rich. Well, when the tidal wave of inflation hits, we're all going to be millionaires, guys, as you know perfectly well. That is, you will have pay of $1 million at the end of the year, but it will be like the pay in Weimar Germany after World War I. You'll have wheelbarrow loads of money, but they won't be able to buy anything. However, you will pay a tax rate now being set up for the rich, because, after all, you made $1 million.
Well, the inflation tax is a real tax, and in our opinion, it is the cruelest tax of all because it hurts those who can least afford it the most, the elderly, those on fixed incomes, the folks at the lower end of the wage spectrum. That's who this inflation tax really hurts the most. And it erodes and drives out the middle class.
It hurts them, Jason. It not only hurts them, but it hurts the value structure on which a great, powerful, and free country is built. For example, what happened in Weimar Germany is people worked and saved and scrimped all their lives. They took all their life savings down to the government office and said, what can I buy with my whole life savings? And they were told, you can't afford one postage stamp anymore. Your money's been devalued. It's worthless. You know, I wish Congress could work miracles. However, Congress cannot pass an effective law repealing the law of gravity. I wish they could. I wouldn't have to diet. And they can't pass a law repealing the law of supply and demand. When they print another $100 trillion to pay off the government's debts and dump that into the economy, that simply makes every dollar that you worked all your life to save worth less and less, because supply and demand means more dollars chasing the same number of goods. It'll take more dollars to buy them. And so we're being set up to have all those who have saved, who have worked hard, who have been thrifty, they'll be the ones punished. The ones who will be rewarded are the friends of government and the speculators and the crony capitalists.
Lowell, is there anything that you or I, the average citizen, can do to help take back control of our money?
Yeah, as was just reported by USA Today yesterday, our debt now equals our entire national income. Our country is already bankrupt. One thing you can do, therefore, is realize that every paper dollar in your wallet is like a share of stock in an already bankrupt company that's about to go bust economically. For God's sake, while the dollars still have exchange value, trade them for something tangible that they can't run off a printing press in Washington, D.C. Now, that could be antiques. It could be emergency food. It could be ammunition. Ammunition's been a terrific investment in recent years in terms of appreciation. Or the biblical and constitutional standard of our founders, gold and silver. But these are things they can't print, and therefore these are things that will hold value and grow relative to dollar value as the politicians print more and more paper dollars. But do not leave all of your life savings in paper dollars.
Lowell, would you think gold and silver are the two best buys then?
They're the two things that have been – there are only four standards of biblical money in the Bible: gold, silver, cattle, and land. That's how wealth is defined. So those are the two things we use that still meet the biblical standard, that work as money all around the world. Gold has already become the new world reserve currency. China, Japan, and Russia are already moving away from the dollar. In fact, China just signed an agreement with Japan that they'd trade with each other in their own currencies. They'll no longer go through the U.S. dollar, as was the case. It's clear to everybody that the politicians here are not going to save the dollar. For example, if the Democrats have their way and their plans, we're going to have 10 years from today a debt of about an additional $29 trillion instead of 15. If the Republicans get their way, we'll be saved because that added debt will add up to only about $24, $25 trillion. In other words, neither of them are going to cut the debt, seriously. It's utterly surreal, but this is what modern politics have become, and the way you get elected is not by threatening people's money. More and more economists, however, including the chief economic writer for Newsweek magazine and the Washington Post, Paul Samuelson, has been just freaking out over the fact that we have now passed a line. We are now a society where instead of adding benefits to people, the government will have to start taking benefits away. And if it doesn't, then we just go over the cliff that much faster. But there's no sign that politicians of either major party have the will to rein the government in, to seriously cut back on spending. And this means, among other things, we're going to have, for a time, massive taxation. It'll all be said to be taxes on the rich, but the net effect is it will be taxes on the producers. You're going to see a whole lot of the producers in this country just pick up their money and leave. I witnessed this in the state where I live, California, where we used to be the state of the gold rush. In recent years, we've had a reverse gold rush. People are rushing with their gold out of the state and just leaving the guinea pigs with their hands out to the government saying, I want more benefits. Well, once you've chased out the productive people, who do you think is going to create those benefits? Because, frankly, government doesn't make a lot.
Lowell, we'd like to have you on again soon and often.
That would be my great honor.